Recent reports of strong dairy cow prices in Ireland are drawing attention to a broader question facing the dairy sector. As milk prices rise and farm profitability improves, producers typically have more incentive to invest in replacement animals, improve herd genetics, and potentially expand production. But today's operating environment is very different from previous cycles. Labor shortages, higher financing costs, environmental regulations, and land constraints are all making expansion more challenging. So as margins improve, are producers looking to grow their herds, or are they focused on getting more out of the animals they already have? I'm Johanna Bota, and to discuss how dairy farmers respond to changing profitability and what recent market cycles can tell us about future herd investment decisions, I'm joined by John Lancaster, head of EMEA Dairy and Food Consulting at StoneX. Welcome back, John. It's great to have you with us.
Thanks for having me again.
So we've seen dairy margins improve in recent months, which should be a welcome development for producers. Does that give farmers the confidence to start rebuilding their herds, or is there still some caution out there?
Yeah, I think the key thing to take away from it is farmers do respond, and dairy farmers in particular do respond to margins, but it's not as simple as, just adding more cows and we're getting more production out of that. And it's not always as simple as an immediate response. There's lags, and as you very well put there, there's other factors that are also playing into the bigger decisions that they're making between replacing cows or expanding the herd.
Now, we've been here before, right? In 2022 and again in 2025, strong dairy margins, gave producers more financial flexibility. And we're seeing a similar environment today. So when margins are this healthy, how does that typically change farmer purchasing behavior?
Yeah, and I kind of like to put in a key point regarding, say, especially European farmers and US farmers. I think for European farmers, margin is important, but they don't necessarily see margin on a day-to-day. Mm-hmm. So the average dairy farmer in Europe, they're around 100 cows or so. So most of the labor being supplied is directly from that farmer, him or herself. So say unlike a bigger herd in the US where the farmer is more of a farm manager and they've got a much, say, closer, tighter view on the accounting, on the economics. Right. But what the European dairy farmers do see is cash flow. And they're seeing how much money is going into their account, how much money is going out. And I'd always make the argument that they're more responsive to positive cash flow, negative cash flow than directly margins themselves. Now, those two things are very intrinsically related, but they're slightly different in how the farmers perceive them and react to them over the course of time as well. For 2022 and 2025, they're actually both were very good margin requirements and good cash flow positive environments, but they were very different kind of scenarios. In 2022, we had the Russian invasion of Ukraine. Initially, that drove up our input costs. So even in the run up to that invasion, wheat had gone up, natural gas, etc., fuel. So input costs had got very high. Dairy commodity prices, which are the leading factor for milk prices, were at moderate levels. So that shrunk the margins during the first half of 2022. Mm-hmm. And then farmers reacted somewhat negatively. You saw weak milk production, prices reacted to the upside. Mm-hmm. And then you got these almost record high milk prices by into the end of Q3 and Q4 up near 60 cents a litre. Mm-hmm. And that drove that higher margin. So you had high inputs, but high output. High input costs, but then you had obviously the high output output prices you're getting for the milk. 2025 was a little bit different in that we had more moderate commodity prices, and butter was relatively high, but skim milk powder and cheese were in the more moderate to kind of still relatively high levels, but not to the extent that we had in 2022. But feed costs and energy costs, etc., are actually very much on the lower end of the spectrum. Mm-hmm. So from a margin point of view, 2025 was actually significantly better than 2022, even though the milk price itself was lower. And we also got the advantage of some very good weather or very favorable weather conditions in the late summer and the autumn as well, which also helped the situation. So get a very positive piece for the farmers. So both years we saw farmers responding by increasing output, but again, kind of driven by slightly different dynamics in in both scenarios.
Yeah, of course. Correct me if I'm wrong, better margins don't automatically mean bigger herds, right? Like, what are some of the biggest challenges preventing producers from expanding today?
Exactly, and I think if you look at this over, say, the longer term, what we generally see over the longer term is each individual cow, we're getting higher yields from those cows.
Right.
And then the constituents in the milk, the fat and the protein are also increasing. So the two ways that farmers can increase their milk output is by increasing the herd and by improving the genetics of the animals and the work practices and the environment that those animals are in and the feeds, etc., to get more output per cow. And what you generally see is in an expansion period, a bit of a combination of both. You can even get expansion in milk production when the herd is actually dropping, if that genetics movement and that ability to, say, put in a little bit more feed, etc., goes in as well. So it can be a very complex environment. And then overlaid on top of that is, say, the likes of environmental restrictions.
Right.
So Ireland and the Netherlands both have, and most of continental Europe have restrictions around nitrates and phosphates and other potential pollutants for waterways. Those restrictions are pretty strong in, for example, Netherlands, Denmark, and Ireland. In Netherlands, it's very difficult to expand your herd, but you can get more output per cow. In Ireland, there's still some ability to expand, but that it's pretty limited because of the nitrates regulation. So some of that is shifting land area that would be producing, say, cattle or beef, I should say, into dairy production, and those types of land change pieces, and then overlaid with that as well, you have with good margins, farmers tend to hold the milking cows in the herd a little bit longer, so getting more time in the herd as well. But that's more of a transitory piece that can shrink back a little bit if margins reduce or profitability reduces.
Okay, so then is it fair to say then that we're seeing a shift away from herd expansion more toward herd optimization?
Yes. I think that's very fair to say. Most likely, as Europe as a whole, we will see the total dairy herd numbers shrinking over the number of years. And we're seeing that in most of the big producing countries, that generally the herd is declining. Some countries relatively slow, some countries a little bit faster, but the milk output is either holding flat or increasing. And we've had a number of different pieces over the last, especially say last 20 years. Genomics has improved dramatically with the ability to gene sequence very young animals and then be able to pick better potential sires and better potential dams, the males and the females respectively, to select for the next generation. So that means you can have a better generic merit moving forward. We've also had the advent of sex semen, which basically means that the farmer can choose whether they have a male or female calf.
Okay.
If you're talking about, say, 30% replacements, which is a rough number here, and that can vary depending on the country and the type of system, etc. In a normal system where you've got 50-50 chance of a male or female calf, you need to put over 60% of your herd in calf to dairy genetics, because you're hoping to get 50% of those, i.e. 30% that you can use as replacements. If you've got sex semen, you only maybe need to do 35%. It's
because then you choose
a little bit more. Yes, and you choose the best 30% of your milking cows to propagate their genetics to the next generation. So that does two things. It means that the rate of genetic progress speeds up because you're selecting your best cows. It also means additional revenue for those farmers, because the rest of those cows, you can put them in calf with beef genetics, with beef fatters basically, and those calves are more valuable to sell into the beef market for producing our steaks and burgers, etc.
That's some very interesting innovation. John, thank you again for joining us and for all that insight. And thank you to our viewers for watching. For more financial content, don't forget to subscribe to our channel.